Greetings, members, one and all of the Salivation Nation. Gold, the metal of fear. Let's explore. You know, fear is a very powerful emotion. It drives us to the point of irrationality. However, it can also wake us up to reality. And that is the perplexing thing that I think drives many of us for many aspects of our life, especially in today's age of the coronavirus and the fear that we may either get it or that the economic impact of the virus will have a lasting effect on the economy. And it's an understandable fear and reaction, and many of us are reacting, especially in the world of precious metals, the community that this video is based on. You know, it's amazing how many people are buying right now and how the community is growing because of it. Now, you may say that's a good thing, but it can also sour people's taste for gold, and silver too, by the way, after this is all over. Because eventually we will return to some normalcy. What that new normal will be is another layer of fear that's out there. But regardless, gold, it has an allure, it has a beauty to it. But there's also some fear that's driving it. Let's take a look at an article here by Yahoo Finance that is shared by way of Bloomberg. It talks about the market, how gold bugs finally see their predictions of gloom coming true. For years, gold bugs have relegated to the fringes of financial markets, often viewed by mainstream investors as tinfoil hat conspiracists with basements full of beans and bottled water. Their warnings sound apocalyptic: a coming collapse in financial assets, widespread devaluation of paper money, and global disasters that erode civil liberties. Well, welcome to 2020. As COVID-19 coronavirus brings economies around the world to a standstill, gold is rivaling treasuries and the dollar as the best performing major assets this year. The metal proved its haven status with a 6% rally as almost $16 trillion was wiped off global stock markets and oil plunged. That is staggering indeed. That is almost, 2/3 of the debt that we've got here in the United States. There's been a scramble for physical metal as investors and exchange-traded funds build the biggest stockpile in history, and dealers say they're struggling to find gold to sell. There's a problem with that statement because, investors and exchange-traded funds have the biggest stockpile of paper, but not the physical metal. So the virus, again, shows that fear and gold go together. We've been trying to warn people that something like this would happen, said Jim Rickards, a name where most of us are familiar with, the author of several books that predicted a coming financial reset. Rickards, who spoke from a New England mountain compound, has long recommended holding gold as a precaution for wealth preservation. I've been saying it for years, he said. I'm not happy about being right. There's echoes of many of the typical gold bug predictions in today's crisis. Besides the obvious economic and financial market upheaval, social interaction has become taboo, and in some places soldiers are telling people not to leave their houses. Even so-called paper market for gold is showing cracks and squeeze. Last month on New York's COMEX, the biggest gold futures exchange, the gold futures exchange, added fuel to another of the prophecies that when the crisis came, there wouldn't be enough gold to go around. And we're finding that as well for silver, too. When a hot gold trade blew up, the rush for 100-ounce bars began. We have written more than 3,000 pages of research about gold and mining stocks in the last 14 years, and it is pleasing to see that many of our theories have come true, said Ronald Peter Soferli, managing partner at Incrementum AG, a Liechtenstein-based investment and asset management company. We're seeing lots of interest because we've been pounding the table for gold as a portfolio stabilizer, as a defender of your portfolio, and gold did its job rally really perfectly. And there's no counterparty risk. Of course, some of the predictions were also a bit vague. The Armageddon survivalists see gold more as the ultimate haven against generalized risk. As a hard asset, it acts as an inflation hedge. It has deep liquid markets in which to trade, has kept its value over centuries, and, more importantly, physical metal stored in a vault has no counterparty that can default, not even a government or central bank. However, I will add that, as long as it's in your vault that you have access to anytime you want to, otherwise it does have counterparty risk. Central banks have officially lost control of their most powerful policy tools, said Roy Sebag, Chief Executive Officer and founder of Gold Money Inc., a precious metal investment firm with $2 billion in assets. It is against this macroeconomic sea change that gold will thrive as the money par excellence. Gold rose for a sixth straight quarter in the 3 months through March, and spot prices traded around $1,612 an ounce on Friday. While that's still well shy of the record $1,921.17 reached in 2011, predictions are mounting that the metal will scale new highs in the coming years, and I'm one of those that thinks that it could reach there. Even those in the mainstream are climbing on board. Analysts in Citigroup see gold climbing to a record above $2,000 an ounce in 2021. And I will also add that we're seeing prices for gold now, especially with considering the higher premiums. I've seen some prices for some gold at around $2,000 an ounce. Merck Fink, chief strategist at Robert Gale, predicts it will rise to $1,750. We almost got there recently. And Cesar Perez Ruiz, who manages 236 billion Swiss francs at Piquet Wealth Management, has been buying metals on dips near 1,500. Gold might be one of the few things that diversify your portfolio, said Chief Investment Officer Ruiz. It's moved quite fast very recently, so I'm waiting for a pause. It hasn't only been one-way traffic for gold. As in the 2008 crisis, prices have fallen during days of acute stress in the broader market as investors faced margin calls and sold liquid assets to raise cash. Still, the declines have been largely short-lived. Before this is over, gold is going to go up a lot. Commodity investor Jim Rogers said by phone from Singapore, whenever people lose confidence in money and in governments, they always buy gold and silver, and we are seeing it for silver too. And in fact, these lower prices that we've seen for the spot price of gold and silver, let's take a snapshot here of what the markets were like when they closed yesterday. It just goes to show you that though the prices are there, people are paying a lot more for gold and silver now because, dealers are charging a lot more, but also because, and it works it's a two-way street. Some of these dealers are paying more. Now, there are some exceptions where some dealers are being hard-nosed or local coin shops and saying, we're not going to give you more than spot for your gold or silver. But we're finding it more and more that the market is evening out on both sides, from both the seller's market and buyer's market. So it is interesting to see how this is all playing out. Gold, it is the money of kings, and it's something that we all have been mesmerized by for quite some time, and I believe it could reach the new highs. But this whole idea of fear, there's nothing wrong with fear. Fear is a mechanism that is a warning to serve if used in a constructive way. Now, I will say that, I have certainly fallen victim to buying out of fear, and but I always have in the back of my mind, I did that, by the way, back in 2013, thinking, it's going to definitely go up. I was, in a way, sorely disappointed that gold did not go up beyond the points of 2011 after I cashed out my previous job's IRA to buy gold, physical gold. But you know what? I've learned a lot since then. I learned that you shouldn't just buy solely out of fear, but fear can be a motivator that could be a valuable commodity, so to speak, in making purchases. And really, That's why we buy gold and silver. In many cases, because we don't have the faith in the dollar that most of mainstream society does have. That does not mean that we shouldn't have some faith in the dollar. We do, because we use it for transactions each and every day. But nonetheless, this metal that you see before you here is something that has been money for millennia. And silver too, by the way, too. We got to include silver in here because there has been a massive demand for physical silver, which should be exciting to many silver bugs out there. It has sort of regained its place on the table along with gold, right beside gold. No matter what the spot price may say, what people are paying is not much more than what the prices were before the big dip in silver prices. Some people may even call it a crash, so to speak, to go from $17 down to $11 and change. But make no mistake, these metals will press on. They will do what they've always done. And I think it's a good idea to have some with some measure, not more than a certain percentage of your portfolio. You shouldn't let fear drive you so much as to spend yourself into debt in accumulating this beautiful, shiny metal. I believe fear should be a driving factor only in as so much that when things like this come along, or what could happen in the aftermath of this, especially when we have a $2.2 trillion spending package from Congress alone, notwithstanding the trillions of dollars that are being injected by the Federal Reserve, and interest rates at zero, and some predict that we could go negative very, very soon. And so they can do whatever they want with the monetary system. This new monetary theory, modern monetary theory that they're pushing upon us, and in some ways it's a struggle because we don't want small businesses to fail, but nonetheless we are going to be paying the piper on this down the road. There's a can, and that can has been along the road for quite some time. We've just been kicking it for quite a while, and we're kicking it again for different reasons, and but still, nonetheless, it is being kicked. And what can't be kicked around is gold. It's too heavy. And I believe silver too. So buy your metal. Buy it with some sense of fear, maybe, but a healthy sense of fear. And make no mistake, I'm not a doom and gloomer either, and I know that many in the community have seen, well, this is it, we're near the end, or what have you. But there's something about the resiliency, especially the exceptionalism that is the free enterprise capitalist system that we live. And I believe that we will recover from this in some manner or form. In fact, I have more faith in the engine of the American people, and also for many enterprising nations around the world that follow a representative republics or some sort of democracy and the rule, and that allows the free enterprise system to flourish. I believe that system will, in place, when utilized, will flourish, and we will do well. We will bounce back from this. It may not be as quick as we'd like, but we will come back from this. I have more faith in that system and in the people behind that system of free markets than I do the currency that is being exchanged. So there may be a reset, as Jim Rickards suggests, of the dollar, and I've talked about it, and I believe it's coming. I think we're closer now than ever before on a reset of the dollar. But make no mistake, whatever they put into place, if you let the engines of the economy and the people take control, then we're going to be okay as a people here in the United States and around the world. But there's always good to have an insurance policy, and that's what gold has, and that's why we buy insurance. We buy insurance out of fear. It's a healthy fear. And if our rates go down for the premiums on that insurance, it's because we're doing all right with our cars, with our homes, or what have you. We're doing okay. We don't really have to use it. Same thing with gold. Same principle holds with gold and silver. So there you go. Gold, the metal of fear. There you have it. I'd like to extend a multitude of gratitude to you all for watching. and encourage you to please rate, share, comment, and subscribe.